You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. I sound a little bit different today because, listeners, I'm not coming to you from our Chicago studio. No, I'm here in a southern studio here in Nashville for the annual Options Industry Conference. Should have a fun rotation of people joining me here in the studio this week. And kicking it off this week, a dynamic duo indeed. First, we have Mr. Greg Stevens, the Vice President of the Options Experience over there at Fidelity, and also joining him, Colin, the Director of Options Experience. Again, at Fidelity. Gentlemen, welcome to the Options Insider Radio program.
Mark, thanks for having us.
Yeah, thanks for having us.
Well, it's been a while since we've chatted. I know we used to chat fairly regularly, and my opportunities to check in on all things Fidelity are fewer and farther between these days. So let's start there. We're obviously here at an industry conference. Good timing. We're coming off what is the busiest month in the history of the options business, records across the board. I know we've been talking for a while on the network. Can we possibly see a day when we do 1 billion contracts in a month? Well, we did see that day, and it was last month, 1.1 billion contracts. So let's start there. What are your thoughts on that just insane number and maybe where we go from here?
Yeah, you know what I would say is that, we see volatility coming back in the markets. It's a little bit of a follow through, from the or the pandemic days when we've seen a huge increase in retail trading and just with volatility. I think the more directional plays, that we're starting to see, with, ETFs and indexes, moving out of some of those single stock names, into, more directional, type of trading, I think is starting to, to show. And, I think it's one of the reasons why we definitely have, seen, volumes continue to increase 1.1 billion. That's something, right? We barely did 1 million contracts, 10, 15 years ago. So, yeah, I think that we're probably going to continue to see that. At some point, we'll level off a little bit. But I think that, with zero DTEs, and I'm sure we'll have a good discussion on that,
I'm not familiar with that. What are you talking about, sir?
Shorter term expirations, right? We've seen, the SIBO, at Tuesday, Wednesdays, and then we got a full slate of, options expiring on a daily basis. We have weekly options, which have been around for, quite some time now, but that move to shorter term expiration seems to be, driving some volume.
Colin, same question for you. You're obviously on the trading desk day to day, so you're really engaging with the bleeding edge of the customer experience. What are you seeing and hearing out there as we put up these record volume numbers here, Colin?
I think a lot of it goes the same idea. The more expirations, the more products are out there, but also it seems like education and just the knowledge about these products have gotten out, and it seems to be just about everywhere. So here in the Option Insider, it gives them ideas, gives them more education. But then you also have the online classes and things like that helps them build that confidence where they're willing to make that first step. And I think we're starting to see probably a step up because of that, and that the education is more out there.
Yeah, and we can't say enough about, just the education that, across the industry we do, from what you do to what, our we do and our competitors. It's really driving a better understanding of the product, and, better understanding of the product, creates, more volume. We just don't have, people coming in and trading and leaving. They're starting to understand there's more access. Customers like to learn, as they go along, and, that we got to really meet them, where they're at. Social media, to our platforms. We got to be there for them, and, that's definitely helping.
Well, you mentioned kind of the elephant in the room down here at the conference this year, which is, of course, 0 day. Mm-hmm. It's funny, since we all came down and sat down last year, this 0 day phenomenon has really just engulfed the entire options market. It was still pretty nascent when we sat down this time last year. They had just really added the 2 days over there at SIBO. And it seems like, for whatever reason, just completing the set, that's all it took. It just awakened this new style, this new era of trading out there across the spectrum of traders, professional, institutionals, funds, retail, mom and pop, one lot traders. All of them seem to be just fixated with this short-term 0 day phenomenon. So walk us through what you're seeing over there at Fidelity. Are your clients, are they as obsessed with this as everyone else? And what are they up to? What are they using these products for?
Yeah, I think, rising tide lifts all ships. We're, also seeing, increase in, 0, days, expiration options, especially in that ETF and cash settled index, framework. And, again, Mark, I think it goes back to, if you look at the difference between, the last year and the previous years, the market was slowly grinding up. And then in some cases, it was moving up pretty quickly. And so it's really a one-sided trade. Now we see, on a daily basis, I think on Monday we were down, a couple hundred points on the NASDAQ, Dow, same thing. Today we're up, and so it does really play into, if you're a day trader, you're trading more directionally, you're going to see those products. We still see, the big names, the FANGs, the Teslas of the world, seeing their share of, of volume. And plus it does also help. And if we think about, a year ago, or, I can't put a time frame on this because I can't remember, but all the stock splits, Google, Tesla, it brought, those stocks into a more tradable universe. When you've got a $2,000 stock and a $100 premium, it's kind of hard to trade for most people. Now that, they've split, they're more accessible. There's a little bit more, going on in that space. So it's going to drive, volume, across, industry participants, not only, retail, but institutional and so on. But I do think that, the volatility in the market has led to more trading, and, these shorter term or shorter duration options allow customers to pick, and choose when they get into the market.
Hey, Colin, same question for you. Are you seeing a lot of engagement on the 0 day side from the Fidelity clients? And what are they up to? What are they using these things for?
It's a great question. What they're using it for is kind of what is in the back of the mind when they're doing it. What I know that they're benefiting from is that with those shorter 0 DTEs, something to that effect, those short expirations, when you're buying an option, you're not paying as much premium because you don't have the vol over those extended days. So, yeah, in a way, you're paying a little bit less so they can play out their directional views. And let's also call it for what it is. You get that hyper-accelerated time decay. You get to watch that thing tick away throughout the day. So they also have the opportunity to play that as well. So kind of have a combination of both of those going on. The underlying reason is going to be different, obviously. Directional plays, I think, is going to be the kind of the main view that they're going to have on those when they're going to use those really short-term views, but still have that opportunity to take advantage of selling that time decay.
And you were down here at an industry event, and these products are not without their controversy. Most people seem like they like them, they embrace them. Certainly the exchanges like them, extra volume. The brokers seem to like them, bringing in more volume, more engagement. Some people who've been around the space for a bit maybe take a little bit more reticent view to them. They think maybe this is perhaps a half step towards more of the gambling side of the spectrum, which they're not that comfortable with. Maybe moving options away from their core risk management function into more of this kind of roll the dice and see how it lands type of function. So there is very much a split on these from an industry perspective. Where do you guys fall? Maybe Greg, we'll start with you. Are you a fan of 0 day? Are you maybe a little bit reluctant? How do you feel about these?
I don't know that I'm reluctant, hesitant, I'm for or against them. I mean, it's another product, and we have to do a good job of educating our clients on the benefits and risk of those. I mean, can it bring in some of those elements that you just mentioned? Of course. I mean, but anything can. I mean, I don't think that zero DTEs have, it can be one of those things, but I think that, it's up to, us to make sure that, our customers are, knowledgeable, they understand what's going on with these and, the benefits and risks. So I don't know that they're good. I don't know that they're bad. I think that it's just, it's another, tool, for these folks to be trading.
You have to choose, good or bad. There's no in between here on the network. We must come down on the side. Colin, where do you fall on these products? You're seeing a lot of people obviously using them, maybe having good results, maybe not. So where do you fall on these products?
I think it's important that whoever is utilizing the products understand what exactly it is. And I think a lot of times when someone jumps into it, they don't realize what that short-term time frame is. What that means is someone who's buying and just going long into the option, they don't realize you have just that trading session for that trade to play out. You don't have extra time. You have to have a strong outlook. And in something in that short a time frame, it's either you're right or wrong, is what it typically comes down to. Now, are there certain traders who could use it or not? I think that's all defined in what you're going in with, having a game plan and having an exit plan. But I think it's also important, do you understand what you're getting involved in? I think that's so important. Because with some traders, if you don't know what you're getting involved in, it might not be the right product for you. But if you understand, I know this sounds very simplistic and rhetorical, but if you know what you're getting involved in, then maybe it could be the right thing. So not knowing the risks and rewards of it.
It does seem like some people are actually gravitating to these products for that very reason you mentioned. They are finite. They like that feeling of not having a residual position at the end of the day. It's kind of like the old market making days. You're trying to go home flat. You never really achieved it, but that was always the goal. People seem to like that refreshing, wipe the slate clean at the end of the day, start over the next day. There is a certain appeal to that. Are you seeing that out there with the clients of Fidelity, Colin?
To some extent, I think I think that they're using the right way? It's tough to tell because there are going to be some out there and we're not going to be able to know exactly all their intentions doing it, whether or not it worked out the way they wanted or not. But we're, certainly have all the education out there, especially with having the last emperor out there, to being able to keep them, to keep them well aware of cognizant of time decay, the time session you have. Is it working out? And if you are going to do that approach, you need to be disciplined because what are we talking about with zero DTEs? It's just that trading session. So do you have an exit plan? And from the loss side, which a lot of people forget about, manage that risk to the loss side as well, which unfortunately not a lot of people grasp. They always fixated on the reward part.
Yeah, and I do think that, we're kind of approaching this as a long only, type of product. It's not, right? We see spreads trading, in these products. We see people putting on the condors, trying to play, the highs and lows of the market. And to your point, some of them like being out at the end of the day. You don't have to worry about that overnight risk, whether there's an ill-timed tweet coming, for your product. If there is something that, the Fed or, we're in earnings season right now, right? That can drive the market. I mentioned earlier, down, a couple hundred points on Monday, we're up a couple hundred points, or we were, this morning. So it just changes. And those products do offer that ability to get in, get out, and you're done for the day, and you can reassess what's going on in the morning. But I do think that it's not just long onlys. So there's spreads trading going on in this. They're defining their risk, and so I think that as we're moving further down this educational path, customers are doing it differently than maybe they were when they started with one product with one play only, buying an option, buying a call, buying a put. Now they're looking at different ways to change that risk profile.
Looking at 0 day again, because it's inescapable down here at this conference. It's going to be the talk of every conversation, it seems like. But the other question we're receiving from a lot of our listeners these days is, okay, we like the SPX ones, we like the index. Mm-hmm. What else you got? What else you got for me? They really want to see the single name Apples and the Teslas and all that fun.
Right.
We have the SIBO teasing them now with 1-day VIX. It's not tradable. It's just an index, but they're teasing them with more offerings out there. So I'm curious, what do you think we're going to be seeing? And more importantly, as our audience wants to know, when are we going to see it? So Greg, I will start with you. What is your outlook? What do you think we'll be seeing coming down the road on the 0-day space? Do you think we'll be seeing the single names anytime soon? Or maybe the flip side, we are at a clearing and OCC conference. Seems like OCC a little bit reluctant to take those steps. What do you think we'll be seeing in the near future?
Well, I think it's going to be a good question for all of our friends at the exchange. How quickly and how fast they want to move this forward. With individual equities, we have to be very thoughtful, especially due to assignment and exercise. Coming into a 0 DTE today, I think what was it? Chipotle, up 200 or 300 points. I mean, if that was after the close, then what? Somebody gets, exercise, they were 50 points out of the money, and now all of a sudden they're on the hook for a $2,000 stock, which they paid, a couple of bucks for the option. It can be a huge risk event, not only, for the client. I mean, you've got, $100,000 in your account. Now all of a sudden you own a $200,000 stock. And so you can get sideways, pretty quick, I think, with individual equities. Does that mean that we shouldn't do it? It's just got to be very thoughtful. And I'm not sure exactly how we move it forward yet, in a way that the risk can be managed appropriately, whether or not that's, some variation to this product, something else. I think those details really still need to be thought out.
I've heard talk of cash-settled equity options, and we need to launch a new product first before we can launch the other new product we're talking about. It seems like maybe a few extra steps, but are you hearing that as well, Greg?
I mean, hearing a lot of conversation, and so that has come up, before. I think it's going to be difficult, imagine, for something like Apple, that we have physical settlement, but then we have a whole different, product, that's going to be cash settled. I mean, we had minis, on those products, many years ago. And it's got to work with what we have out there. Cash settled seems to make some sense. I've heard, discussions about moving the contrary, exercise instructions to 4 o'clock or 4:01. So you either have to have them in or you don't. I mean, there's some pushback on that because firms need some time, to figure that out. And if you're going to shut that off. So, I mean, there's a number of things, and that's when I say thoughtful, I mean, people are thinking about it, and so your question, when it happens or if it happens, and probably lean, in just my personal opinion, lean that it probably will happen at some point, but there's good conversation going on, and hopefully we get it right so we can manage, that risk, when it comes through. I mean, a little bit easier on Friday to do that just because there's not as much news that comes out. It doesn't mean it doesn't happen, but we really have to think that through, whether it's cash settle. Cash settle makes a whole lot of sense, right? 4 o'clock we mark it and you're either in or you're out, at that point. But we'll see. I mean, I think, like you said, there's going to be a lot of conversation about that down here, and might be a different discussion if we had this on Friday versus before the conference starts.
Then we have to look forward to a whole other education cycle on these are the cash settled Apple, these are the stock settled. It's going to be a good time.
Yeah, I mean that's a good point, right? I mean, you not only if we look to bring out a new product, well then it's education. It's Colin mentioned about and we talked a little bit about shorter term expirations, time decay, what, is the impact, on, the premium, throughout the day. Now we have cash settled Apple, we have cash settled, we have physical settle Apple. I mean, all of those things really need to be thought through, because what if I trade the wrong product? What if I think that I'm doing cash settle, but all of a sudden I'm doing an equity and, physical settlement. So it will be important to get that right and make sure that they're differentiated enough in all of our platforms, that a customer can make the right decision for themselves.
Colin, same question for you. What do you think we'll be seeing down the road on the 0-day front end? When will we see it, sir?
Well, I mean, I don't know about the timeline because it seems to be very sporadic how products come out. But what I've noticed is that new products have been introduced lately a lot faster than what I remember. And from a risk standpoint, I've spoken with a lot of clients over the years. I mean, it's 15, 16 years speak with clients directly about managing their accounts and risk and seeing how ugly that can get and how quickly that can get from exercise and assignment. And that really does worry me from the stance that all it takes is you forget once. And I know that I've forgotten things in my time, including leaving the trade overnight. I've had to do that before. You have that panic attack all weekend. It's not a good feeling. And I got lucky on Monday where it rallied and it didn't destroy my account. But there have been so many stories in history about how trading, if you don't manage your risk, that people have gone bust from that. And so many.
And the other thing, Mark, too, I mean, it's a little bit incumbent upon the firm to, help manage that risk as well. And with, the huge increase in the number of traders, I mean, firms have had to be, pretty flexible and react quickly, to that change in environment, that they've had. And to Colin's point, whether it's notifying the customer alerts, we'll always, want the customer to manage, their own, their own positions, but we also have to help them, be able to do that. So whether it's alerts, education, all of those things play into it. And we're in this, together, when it comes, to, firms, clients, industry, and we'll see how it works out.
Well, it's hard to believe, but there are other topics going on in the world
we could
of
go
options
on and
besides 0 day. So over there at Fidelity, when you're not fixating on the 0 day phenomenon, what else is driving the conversation? What are you working on over there in the options experience over there at Fidelity?
Yeah, I mean, I think there's a lot of good things, going on. We are, moving, to be more flexible, with, our times and turnarounds. But, we're, from mobile to our Active Trader platform, which is Active Trader Pro. I mean, we are working on, new options experiences. Mobile is working on theirs. Right now we just, put out the foundation, for a new platform on Fidelity.com. If you've got a Fidelity account, you can, go there now and take a look at our new option, chain. It's the foundation of what we're going to build, out a little bit more. We want, our customers, and we're going to try to provide, an experience that leads the customer, to what decisions do I have to make, whether it's time, volatility, max gain, loss, break even, probability of success on these things. Really try to, I mentioned earlier, I mean, while, we've got some great content, out there, customers also like to learn as they do. And so we're trying to build, a bit of a platform that's going to support that learning experience, make sure that we have in-context education, make sure that we're providing a modern and, responsive experience, whether you're looking at it in a mobile view or you've got, a 60-inch monitor, that you like to trade from. So, we've got a lot of good things going on, within that space. We've just started to roll out some of the enhancements, there. We also have, Trader Dashboard, which is kind of our interim step between Fidelity.com and our downloadable platform for those who just want to, have a streaming platform that they can trade from, monitor their positions. I'm at, the conference this week and maybe I don't have, I just want to, have something up and running, but not maybe full time. And, it's getting rolled out, to all of our customers, at this point. And so there's a lot of good work on that space. They're working on, adding, an option chain and a trade ticket and all of those things. So, we're constantly building and evolving, the options experience. We've, streamlined, hopefully the onboarding process a little bit more, to make sure that we're getting the clients, with helping them self-select, who am I, as an investor? Do I do all mobile? Do I do, a little bit in, our downloadable platform, or I just need some more help? And so then, we'll make sure that they have the right education, the right content at the right time, at the right spot. So really looking at this from an end-to-end experience, when it comes to, how we're going to engage, this client base. And, the other thing too, I mean, we know it's important to get, a little, plug for, financial literacy, when it comes to, the younger generation, making sure that, they understand how to save and to invest. And we have a youth account. I don't know if you're familiar with it, but it's for 13 to 17-year-olds. It acts a lot like a custodial account, but it's very much geared to helping them learn how to save, to invest, to do all those things with, with a guardian or a parent, as part of that account. But it's really important that we start to look at that younger generation and bring them into, investing. I mean, a couple, maybe last year or the year before, we always talked about, the younger generation being unengaged, with investing, not, doing, and it's the farthest thing from the truth, right? We've seen that in the pandemic. They all came, they're still, I think we still see, good participation, within this group. They're not going anywhere, so we need to be supportive and help them through it. So, yeah, a lot of good things. I encourage, everyone, at the Options Insider to open their Fidelity account if they don't have one. Go check it out. It's Fidelity.com. Go to News and Research and check on options and check out our new page.
Well, guys, I appreciate you taking some time out of your busy conference schedule to chat with our listeners here, and I'm sure they'll look forward to all the new bells and whistles it sounds like you have coming down the pike over there at Fidelity, gentlemen.
Yeah, we'll have to come back when we get a little further down the path. But Mark, thanks so much. Thanks to the listeners, as well. Always enjoy stopping by.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.